Hello everyone, in this video we are going to solve problem on profit prior to incorporation. So this is the question. Moon Limited was incorporated on 30th September 21 to take over the business of Star Limited from 1st April 21. The financial accounts for the business for the year ended 31st March 22 disclosed the following information. So here first three lines as usual belongs to the time ratio calculations. The books of account starts from 1st April and the company was incorporated on 30th September and the books of account closed on 31st March. So the following are the related information of sales ratio as well as the other particular informations of the question. From sales from 1st April to 30th September. So we have to identify the duration over here. See, 1st April to 31st September is the pre-incorporation duration, isn't it? So they have given direct pre-incorporation sales 1 crore 20 lakhs they have given. Sales from 1st October to 31st March 1 crore 80 lakhs. Cost of sales 1 crore 95 lakhs. These three particular information is related to calculating gross profit. See, look here, they have given all the other expenditures over here, but they have not mentioned the gross profit. In order to calculate profit prior to incorporation, we need gross profit value, isn't it? If they have not given means we have to identify it. So sales minus cost of goods sold will be the gross profit value, isn't it? So this one we need it for gross profit calculation. Got it? Next, salaries they have given. Salaries as usual we are going to pay them monthly, so it is related to time ratio. Other administration expenses within bracket they have mentioned rent and rates. Rent we all will pay monthly basis. Selling expenses full and full related to sales, so sales ratio. Depreciation of fixed assets, depreciation will occurs monthly, quarterly, yearly wise. How we are going to calculate on that basis, isn't it? So time ratio, I left one thing. Director's remuneration is related to full and full related to the company after incorporation. So it is related to actual post. So I said pre, no, sorry, it's a full and full related to post incorporation. Interest on debentures. Yes, debenture is also related to company's activities. After incorporation only we are going to issue debentures. So interest on debenture also paid after the incorporation, which means actual post. Got it? You are required to prepare P&L account for the year ended 31st March 22, showing computation a profit between periods prior. Yeah. So here what we are going to do, we are going to solve the problem. I'll calculate here only, so it will be easy for you. So first one, calculation of time ratio. Okay, so the first one, how we are going to calculate pre-incorporation period is to post-incorporation period, isn't it? So post-incorporation, yes. So pre-incorporation as usual, books of account starts from 1st April 21 and the company was incorporated on 30th September. So '21 from 1st October to 31st March is my books of accounts ends, isn't it? So this is how we will be calculating from April to September. April, May, June, July, August, September. So we are having 6 months. So remaining 6 months in the post incorporation, which means 1:1 ratio. So time ratio is 1:1. We have calculated the value now. Next, calculation of sales ratio. Here sales value they have directly given. So pre-incorporation is to post-incorporation value. Look here, the value what they have given in the question, 1 crore 20 lakh is to 1 crore 80 lakh. If you cancel the zeros, so we can use 6 ones are table, 6 twos are 6 threes are, so 2:3. So sales ratio is 2:3. So this is sales ratio and this one is time ratio. This is what we wanted, so we have already calculated the things. Now in question they have not given the gross profit value, so calculation of gross profit. So how we are going to identify gross profit? Gross profit equals total sales minus cost of goods sold. So total sales including both pre and post incorporation, we have to include. Okay, so I'll just write here pre incorporation plus post incorporation value. Got it? So 1 crore 20 lakh plus 1 crore 80 lakh, it will be 3 crore minus cost of goods sold. How much they have given? 1 crore 95 lakh. So if you minus 3 crore minus 1 crore 95 lakh, we'll be getting 1 crore 5 lakh. So this is the gross profit value. Got it? So I'll write here so time ratio 1:1, sales ratio 2:3 we calculated, and gross profit 1 crore 5 lakh. This is how we calculated all the required calculations. So next we'll move on to solution. Yes. Yes, this is the statement. Wait a minute. Yes. Income statement for the year ended 31st March, whatever year they have given, along with company name you have to write. So I generally created a blank format in order to calculate each and every problem in same format. Okay, so this is what we are going to calculate now. Got it? So as I said earlier, we are going to start with gross profit, isn't it? So gross profit. So always gross profit will be bifurcated on the basis of sales ratio. So sales ratio is 2 is to 3. So how much we are having gross profit? We are having gross profit as 1 crore 5 lakh. Yes. So we are going to we are going to calculate 1 crore 5 lakh into 2 by 5. So we will be getting 42 lakh as the value. Next, 1 crore 5 lakh into 3 by 5 will be 63 lakh. So this is our total income, 42 lakh 63 lakh. Okay, total A. Next we are going to minus all the expenses. Whatever expenses we have in the question, we are going to identify it. So first one, we are having salaries. Very simple question. There is no adjustment given, there is no increment in the salary or increase in the rent value, nothing like that they have given. They have given very direct and simple question. Just we need to identify gross profit, time ratio, sales ratio, then as per our format we are going to solve it. Got it? Yes. Salaries we are having 15 lakh we are having. So time ratio 1 is to 1, 7 lakh 50,000, 7 lakh 50,000. Next, other admin expenses. So 4,50,000. That is also we are going to calculate in the ratio of 1 is to 1. 2,25,000. 2,25,000. Got it? Next, selling expenses. So selling expenses, as I said, depends on the sales ratio, 2 is to 3. So selling expenses 3 lakh into 2 by 5, 1,20,000 and 1,80,000. Use calculator, then only you will get to know the things. How I will do means, I'll just write here 3 lakh into 2 by 5, then 3 by 5. Got it? Next, after selling expenses, I'm having director's remuneration. You should not get confusion because they have given a remuneration, so we have to take time ratio. Nothing like that. Director remuneration, directors will be appointed after the incorporation. Only the directors will be appointed for the companies. So we have to write it directly actual post. So directly in post incorporation we are going to write 75,000. Next we are having depreciation. So depreciation depends on the time ratio, 1 is to 1. Depreciation is 1,50,000. 1,50,000 into 1 by 2 will be 75,000 and 75,000. Next, last expenditures, interest on debenture, So interest on debentures depends on the actual post. Even debentures will be issued after the incorporation of the company. So actual post, that is 9,000. Directly we are going to write it here. So this is how we are going to calculate. So now we are supposed to calculate the total B. We can write it like that, or else in previous videos what I have done means I have taken this total over the last total column and I just deducted the above expenditures. If you're getting confusions in that method means, how we are going to do means, I'll let you know now. Total A will be your income and total B will be your expenditures. So we are going to add all the expenses, 7,50,000 plus 2,25,000 plus 1,20,000 plus 75,000. Total will be 11,70,000. Will be a total expenditures. So again 7,50,000. I am calculating post incorporation period values, period expenses. Again 2,25,000 plus 1,80,000 plus 75,000. Again 75 and plus 9,000. So the total of post incorporation will be 13,14,000. So next step what we are going to do, we are going to identify the net profit. So how we are going to identify the net profit? Net profit will always be income minus the expenditures, isn't it? So my net profit will be my income, nothing but gross profit minus all the expenditures, total A minus total B. So if I calculate, how we are going to do, as we all know, post incorporation profit will be transferred to P&L appropriate account or P&L account of the current year, isn't it? But pre-incorporation profit will be transferred to capital reserve. So isn't it? So first I'll write the post incorporation value, 63 lakh minus 13 lakh 14,000 means the value will be 49 lakh 86,000 will be my value. Got it? Next 42 lakh minus 11 lakh 70,000 will be 42 lakh minus 11 lakh 70,000. If you calculate, the value will be 30 lakh 30,000. Got it? So this pre-incorporation profit will be transferred to capital reserve. Got it? And post incorporation will be transferred to P&L account. Got it? This is how we are going to calculate the pre-incorporation profit or loss of the company. So I hope you all understood my solution. If you have any doubts means, kindly comment in the comment section. I'll try to solve your problems and doubts in the in upcoming videos. I hope you all like my video. Please subscribe to my channel, support my channel. Thank you for watching.